All right, good morning, drive-in dollar peeps, drive-in dollars, man. It's another day. What day is it today? It is Saturday, July 12th. No market today, which is kind of good because if the market is open, I'm gonna go look. And so it's nice to get a little bit of a mental break, but not a full break. Look at all this paint stuff that I got going. I was doing repairs in the house. If you guys have been following the channel, you know we just bought a house, and so I gotta transition my current property into a rental property, so I gotta fix a bunch of BS throughout the house. But I'm done with that for the rest of the day. I got work in a few hours. But then I was doing some stock research, the last few days. I do stock research every freaking day. And I just haven't talked about the stock CELH much here on the channel. I know I mentioned it like a few weeks ago in like the stocks that doubled my money video, which is like early in the channel. I mean, we're still early on the channel. But I just wanted to talk about it, now that I have this YouTube channel, it's cool because it's really making me like be on top of my portfolio. Since like I talk about my portfolio like publicly, I guess. I mean, I don't have a lot of I have like an average of like 100 views per video, so I'm not like some huge YouTuber or whatever. But I still feel like a little bit of accountability in what I'm saying because like I don't want to sound like a freaking moron on YouTube. And so I've been holding on to CELH stocks. Let's talk about CELH, all right? I've been building my CELH position over the last maybe 8 months. And I got it up to 190 shares. Average cost basis, let's take a look here. Average cost basis for my CELH shares is in the mid to high 20s, like 27. Today, as of the last trading day, which was July 11, it's 45 bucks. So I've made about 60 something percent, like 65% on average on all my shares of CELH. And so is it a buy or a hold? Like it's grown a lot, kind of quick, 60% plus in 8 months or so. It's super awesome, but it's like, where do we go from here, right? And my line of thinking on this is pretty congruent with my usual, sell philosophy in terms of stocks. Like, when do I sell these stocks? And if you don't know like what my selling philosophy is, look at one of the last 2 videos I talk about when I sell stocks, and you'll see like kind of my line of thinking. I'll explain a little bit here as well. But with CELH, what was the story before? Okay, so CELH had a super high PE ratio in the past because it was like a high growth stock. They had growth rates like 50%, 70%, and so their PE ratio was like I think at some point it got to 100 PE ratio. And so it was really richly priced, but rightfully so because the growth rates were in accordance to those high PEs. And then, growth rates slowed. You can't keep growing exponentially forever. And so it slowed, and what happens when growth rates slow is the PE ratio will likely follow with those slowing growth rates. So everybody kind of started selling, and they're like, okay, like the massive growth cycle with CELH is over, so let's hop out. Price went back down, and then it settled in the 20s, like PE ratio in the 20s. And so once it got there, I'm like, oh, CELH is another good opportunity, because even though the growth rates slowed, the growth rates were still high. And we'll talk about the growth rates because there's something interesting about that. The previous quarter for CELH had a negative growth rate. It was like negative 1% or something like that. If I'm wrong, I'll put some numbers or charts here on the screen so you guys can see. I don't want to lead you guys astray with like bad data. But I believe there was 1 or 2 quarters that it had negative revenue, meaning the growth rate was negative too. And so I believe that was because of some supply chain issues where there was some like a miscommunication or like fulfillment issues in terms of like orders of CELH product versus what they could actually deliver. And so it all just messed up the numbers of the company. Otherwise, there's still a bunch of stuff like growth levers that CELH can take advantage of. Let's talk about like a more macro sense, like more sector sense. The energy drink industry is growing like 9 or 10% year over year, which is awesome, right? So it's good for CELH, and of course it's good for Monster, Red Bull, etc., all the other companies that sell energy drinks. So right then and there, CELH is probably gonna have good growth just from the fact that the entire industry is growing. On top of that, they've been steadily increasing their market share in the energy drink space. You know, the big players have always been Red Bull and Monster, and I'm looking at a chart right now, and you know, little by little they're chipping away. From Q1 2023 they had 6% market share, all the way until Q4 of 2024 they ended up having 11 to 12% of market share. So it's like they doubled their market share in terms of the energy drink space. And then now Q1 2025, here's what's interesting, now they have a market share of 16%. So between Q1 2023, 6% market share in the energy drink space, to Q1 2025, 16%. So that's in a span of 2 years. And why did they have that big jump between Q4 2024, 12% market share, to Q1 2025, 16% market share? Because of a super awesome acquisition. They acquired Alani Nu for like a billion or so dollars. Alani Nu, if you guys don't know what Alani Nu is, it's kind of like, for the lack of a better term, it's like a girly, girl-focused, yummy, cosmic blueberry flavor energy drinks. I've known Alani Nu for years because I'm into fitness, and I think it was one of like the famous fitness influencers who started Alani Nu. So it was like a really big, you know, story back in the day, and good for that person. They just sold their company for $1 billion or so, and all they did was sell energy drinks, starting out as an influencer. So American Dream, congratulations to the Alani Nu owner. I think it's a girl, like a girl fitness influencer. I saw her in some fitness YouTube vlogs way back in the day, like years ago, like pre-2020, I feel like. And so now with that acquisition, combining Alani Nu and Celsius, now they got 16% market share in the energy drink company. Alani Nu has shown a lot of growth, hence why they were acquired by Celsius, because they just were making numbers. Like Alani Nu was growing a lot. Well, it looks like $1.8 billion the acquisition of Alani Nu was. So let me give you the last 3 quarters of Alani Nu's growth rates. In Q1 2024, these are all year-over-year percent growth rates. 104.3% growth rate. Q2 2024, 57.8% growth rate. Q3, 41.7% growth rate. I know you can see a deceleration there, but you know, you can't, it's really hard to keep up 104% growth rate, you know, year over year. So, I mean, Jesus, 41.7% in Q3 2024 for Alani Nu. And now all those sales numbers are all gonna go into the revenue and of course the growth rate of Celsius as a whole big company. So this is definitely a great acquisition. So now you have Celsius energy drink itself having great growth more than likely in the upcoming months. And now you have Alani Nu's growth also funneling into Celsius stock price. So we got some good growth levers there on top of having good growth in the entire energy drink sector in itself. Now, what are some issues that I see in Celsius? Because I'm sure you can see in the title of the video, it says, do I sell it or do I hold it? So when I started buying Celsius, it was a beaten down stock, right? It's the growth rate slowed, the prices tanked, the PE ratios went down. It made it more attractive of a buy because I saw it as an underpriced opportunity. Market essentially overreacted on the downside. And so the PE ratios were in the 20s, I scooped up some shares. It's grown 65% since, and now the forward PE is 57. So now it's rich, right? Now, for a stock to command a PE ratio in the 50s, we're usually looking at growth rates in the 20 to 30%. As we can see, I'm sure maybe I'll find a chart of the growth rates of Celsius. It's not really doing that 20 to 30% growth rate performance like it used to, which was higher than that, hence why I commanded the high PEs before. And so, do I think Celsius is gonna have 20 to 30% growth forward, year over year forward going from now on? Yes, I think they will. With that being said, it is a little bit rich, and I see a sizable percent chance that it won't meet that 20 to 30% growth rate. I think it will, you know, but there's a sizable chance, and I'm, in my mind, you know, just shooting it out there, it's a minority chance, but still a chance. Let's say 15, 20% chance it doesn't meet those 20 to 30% growth rate numbers. And with that being said, there's some risk there. So it definitely is still a toss-up on what we're gonna do with Celsius, what I'm gonna do with Celsius. And I'll let you know in the next clip on what I actually decide to do with my 190 Celsius shares, but it's definitely not a story like Fubo where I'm like, I know they're gonna meet numbers, especially with that big acquisition. Like, I can say with almost 100% certainty price is gonna go up. Or SoFi is like, oh, interest rates are gonna go down, they're gonna take advantage of that, plus consumer sentiment is gonna be better and people are gonna be spending more, and student refinance is gonna start going up, the repayments started, so their balance sheets are doing better, SoFi is gonna go up. With Celsius, I'm pretty sure they're gonna go up, pretty sure, but you know, you have to mitigate the risks that come along. And you take risk off the table as much as the risk that the stock is presenting to you. It tells you what to do, right? It's gonna say, hey, I have all this upside, I got a little bit of this dark side, right? The bigger the dark side, the more risk you take off the table. And so I'll probably do something in accordance to that, and you'll see that in the next clip. So ultimate decision with Celsius stock, I did take some shares off the table. I think Celsius still has some opportunity to go up its stock price, especially with the growth levers it has now. With that being said, I'm not in an all-in mindset where Celsius is just gonna be on a for sure tear to the moon or anything like that. It recovered its PE ratio from the previous 20s to now it's in the 50s, which does squeeze the price a little bit. We'll see how the next earnings come up, but that 50 PE with the previous struggles with the recent growth rates tells me that, hey, there may be a little bit of risk here, despite the growth potentials that are still coming up. So let me take some shares off the table that I've already made 65% on my money. I'll take a little bit of that meat, take it home, put it in the bank, take some risk off the table. So what I did was I had 190 shares in my account, and that totaled to about, let me do the math real quick, 6, and then it was about $8,000 with, you know, differing cost basis. It was $8,000, 190 shares. Took off 60 shares, so I have 130 shares left, which leaves me with $5,800 in Celsius. You know, if you get a little bit of profit and there's a little bit of uncertainty in terms of, is the stock probably gonna go up? Yes, probably it's gonna go up. Is there kind of a sizable risk that it's gonna have some challenges that it'll face? Yes, I do see that with Celsius, and so let me de-risk and take off those shares. Guys, thank you for watching the video. If you have any questions or any other stocks that you want me to kind of like analyze and talk about on here, you know, pretty much I do this channel for myself. It's kind of like a diary for me, as well as a community with you guys so I can talk to you. So I really only talk about the stocks that I've been looking at, and if there's any new opportunities, I'll share it with you. It's like a stock diary essentially. Instead of writing down my moves, I just say it on camera and my thoughts with it. And you know, as time goes on, it's actually making me a better trader because it's giving me accountability, because I have to say out loud what I have to do and what I have to my due diligence and stuff like that, and what my thinking process is. But if there's any stocks that is on your guys' radar and you guys want to hear me talk about and maybe consider for my own portfolio with some good, you know, growth opportunities in the price, let me know in the comments below, and let's talk about it. Let's make some money together, guys. But I'm jumping the gun on the outro. Guys, as always, do your due diligence, empower yourself to make more, educate yourself, and I already said it, as always, let's make some money.